There's a mistake people make when they try to understand big systems. They look at the surface, they watch price charts, they listen to narratives. But real systems don't fail on the surface, they fail underneath, where incentives quietly stop making sense. In finance, collapse almost never begins with chaos. It begins with math no one wants to revisit. Costs that were fine in the good times, promises that worked when conditions were easy, you could say, and structures that were never stress tested for patience. That's the lens Mission 70 needs to be viewed through, not as an upgrade, not as a headline, but as a repair to the economic plumbing of a network that wants to survive in the real world, not just in good market cycles, but in really bad ones too. Because most crypto discussions avoid this level of thinking because it just isn't exciting at all. But institutional capital doesn't care about excitement, not at all. It cares about durability, long-term survivability. And durability starts with how a system pays for itself. Because under the legacy model, no providers were paid using a fixed fiat reference, often tied to SDR or USD equivalent, for example, which then converted into ICP at market price. So when prices were high, this looked manageable. When prices fell, the math turned hostile. Lower prices meant more ICP had to be minted to meet the same obligation. What does more minting do? Increases the supply. More supply increases sell pressure, and that pressure pushes prices lower, restarting the cycle over and over again. Because I can tell from my time observing traditional financial markets, this pattern is painfully familiar. With regards to like fixed dollar cost and volatile revenue streams, they survive booms and then they quietly collapse in their downturns because it just gets difficult to survive, not because demand vanished overnight, but because their cost structure refused to adapt. And that's what people mean when they talk about a bleed. It's not dramatic at all. It's just persistent. And Mission 70 directly addresses this by capping rewards and reducing payments for reserved, unused capacity. In plain language, to keep it simple, the network stops paying full price for hardware that isn't actually working. An analyst reviewing publicly available models suggest this could reduce annual inflation close to around 40-45%, depending on the final reward curve of Mission 70. This isn't a promise, it's a result of removing automatic over-minting from the actual underlying equation. Because the survival benefit here is absolutely fundamental. A protocol that doesn't over-issue its currency, cover idle costs, can survive long periods of actual low activity. It doesn't need constant growth to remain solvent in its ways. It doesn't have to rely on optimism at all. Because I can tell you this from like traditional finance experience that I have. This is the difference between a company built to impress and one built to actually last over the long term. Because I can tell you that institutions always choose a latter. Even if it takes longer, it's not about the time to be appreciated. And Mission 70 shifts value away from subsidies and towards real world actual demand, not narratives, usage. Now let's talk about the actual hardware, which is one of the most important components here, because this is where theory actually meets compliance. Legacy nodes were just general purpose machines, let's put it that way. They worked, sure, but they weren't actually designed for environments where, say, data exposure is unacceptable. Mission 70 prioritizes smaller, high utilization subnets secured by AMD, SEV, SMP, SEV, SNMP enables confidential computing. This means that data can be processed in encrypted memory in a way where even the actual underlying node operator they cannot access it. This takes security to a whole different level. This is a niche feature because this is baseline infrastructure for regulated industries. And I can tell you from observing how large institutions evaluate underlying technology, this single capability alone often determines whether, a conversation continues or actually ends immediately in regards to enterprise. We're talking banks, healthcare providers, government, enterprise systems. They don't ask whether a platform is fast or cheap. That's not the most important thing. They ask who can see the data, how safe is the data. Without hardware level privacy, many institutions are legally blocked from participation. They cannot use ICP. And with the entirely new categories of workloads, they become possible. Because this is the shift from a public cloud model to an actually private, verifiable cloud model that can be used at the enterprise government level. And that distinction matters here. It's a difference between using, say, shared office space and actually running a secured data center where even the building owner doesn't have access to it. This is why it's critical in regards to confidential computing. It has been quietly prioritized by firms like JP Morgan, Goldman Sachs, Credit Suisse, the major custodial banks over the last several years. Because it's paramount, not because it sounds futuristic, but because regulators, the auditors, risk committees in the investment banks demand it. Infrastructure that can meet those underlying standards doesn't fail loudly. It simply gets ignored if it can't apply it. And Mission 70 applies ICP with those actually standards. Now, consider capacity versus utilization here. Right now, okay, the network is arguably over provisioned. Too many nodes, way too many. Too much empty space in any business. Paying for, say, unused capacity is a long-term liability. Because one thing I can tell you from my experience in traditional finance, I can tell you working in the industry and taught me is that institutions, okay, don't fee spending. They've got plenty of money to spend. They fee waste, unused resources, look harmless until you realize they compound forever. And Mission 70 pushes a network towards fewer nodes, doing more work, improving the productivity, high utilization, all the subnets that are more secure, lower cost per transaction. And here's the quiet effect in all of this. High utilization increases. What does it increase? Cycle consumption. And what does higher cycle consumption mean? Burns more ICP. And that, my friends, moves the system closer to equilibrium without actually relying on speculation at all. And this is how sustainable systems behave. They don't, okay, need perfect conditions. We're not talking about that because they function because their incentives are actually aligned. Now, let's talk about the trillion-dollar thesis here. Can ICP actually become infrastructure from Mission 70 for any asset to approach a trillion-dollar valuation? It's important. It can't just increase in price. Okay. It doesn't matter about how great the technology is. It has to become a central. Markets assign those valuations to utilities, not stories. The global cloud computing market, okay, is currently estimated around $600 billion or so today and projected by multiple industry research firms to grow towards the multi-trillion dollar range by the end of 2030. We're talking $2 to $3 trillion. AWS and Azure dominate this space at the moment. Embedded inside Amazon and Microsoft are cloud valuations that reflect, say, how deeply infrastructure is woven, say, into the underlying global economy. ICP's potential differentiation isn't about, say, competing feature for feature. Not at all. It's about removing entire categories of underlying risk. No central landlord, no unilateral policy changes, no single points of control or failure. So from a long-term institutional perspective, okay? This matters more than most people think. It matters more than performance benchmarks. Risk committees, okay, ask different questions than, say, retail market participants do. Do you know what questions they ask? They ask who controls the access? Who can freeze workloads? Who can change pricing overnight? Infrastructure answers those questions differently. And moving to a law that's bifurcated, this is going to be more and more important. Now, this is not about outcomes or guarantees. It's about structure. And if a decentralized network were to, say, support even a modest share of global cloud workloads, and that's only going to increase in the geopolitical environment, especially in areas requiring confidentiality, automation, and verifiable execution. Think about it. The economic throughput could be significant. The ICP token operates as fuel through cycles. Cycles, what do? They power computation. Computation consumes cycles. Consumption burns ICP, and that's the mechanism in all of this. Because Mission 70 strengthens this by enabling what's often described as self-writing cloud. AI systems generate applications. Those applications, what do they require? Infrastructure. Okay? What do? They consume cycles continuously, and that demand is tied to usage, not sentiment. Because I could tell you, from my experience in TradFi, I've watched plenty of times infrastructure plays, okay, take years to be recognized. It's a slow process, not because they didn't matter, not at all, but because they worked quietly in the background. And by the time attention arrived, positioning was already established, well established. And what mattered here wasn't speed, it was the actual underlying readiness. Because I could tell you, institutional confidence doesn't arrive with press releases, not at all. It arrives with silence. And we're talking about long evaluation cycles, risk reviews, and compliance checks. We're talking large investment banks, the big players, the JP Morgans, the Goldmans, the Cities, and others just don't build on systems that expose, say, client data or rely on unstable monetary mechanics as such. They don't just chase narratives, not at all. They wait for structure, and they wait for confidential computing addresses that, the data risk. They look at capital rewards, address inflation risk, usage-based economics. That's what they look to address sustainability risk. So from a structural perspective, we can say these are the boxes that institutions quietly require to tick off before engaging even becomes possible. And that's why we haven't got the mass adoption yet. And this is why infrastructure changes often feel underappreciated at first. Okay, you may get it. They aren't designed to excite at all, but they're designed to pass internal review. And understanding that difference is critical. It's fundamental, because under the legacy structure, ICP, sustainability remained uncertain. And you can see it, inflation often exceeded burn. Enterprise readiness was limited because of the, capital allocation rewarded idle capacity. Mission 70 alters those dynamics completely. And because it prioritizes efficiency over excess, utilization over reservation, like privacy over convenience. This is massive. This doesn't guarantee success at all. Okay, nothing does. Nothing's 100%, but it reduces obvious failure dramatically. Without changes, okay, like these, and network risks remain expensive, even if the technology is great, but the risk is a lot greater because it's more difficult to justify the scale. And with them, it becomes a leaner, more predictable, and easier to integrate into serious systems with Mission 70. So ultimately, understanding Mission 70, it reframes the entire discussion completely. Because this is not a cosmetic update at all. It's a correction to incentives. It actually reduces unnecessary inflation. Unnecessary. It aligns rewards with real fundamental usage. It introduces hardware level privacy required by regulated institutions. That's where the mass adoption, that's where the big money is going to come into. And it moves the network from excess capacity towards efficiency. And that's what improves the investment thesis. The key lesson here is simple. Systems endure when structure matters more than the hype. This perspective may quietly change how infrastructure is evaluated, not by asking what happens, say, next week, but by asking what still works, say, 10 years from now. Because everything, comes together when incentives, privacy, and sustainability align. And that is why I am voting yes to Mission 70. And with that, we wrap up today's journey. Strong systems aren't loud at all. They are built to last over the long term. And if this video cut through the noise and actually gave you clarity, not hype, not hopium, then do 3 things for me right now. Hit like, okay? So this reaches people who are tired of being misled. And also subscribe, because this channel is all about understanding where technology, power, and money are actually going before the headlines actually catch up. And comments, say, with you what clicked for you or what you want broken down next. I read every single comment if the comment is of high value. And if you want signal instead of noise, perspective instead of panic, and clarity before consensus, then subscribe now. And do me a favor, guys. Remember, this is all about the medium, long term. And this is where we can give the ecosystem the highest probability of survival. And with that, what happens then when we get a lot of that investment grade capital from the big investment houses? What happens? Price goes up eventually in the long run. It'll become a positive flywheel. And what happens then? That's where we get the mass adoption. That's where we get the government adoption. That's where we get the enterprise adoption, and the world that's getting more and more bifurcated, as you can see, getting more into war, getting more, BRICS separating from the West, the world getting more and more bifurcated. Decentralized systems are going to get a bigger role. Decentralized cloud is going to get a bigger role, because what's going to happen? A lot of the countries do not want their data, their systems sitting on centralized clouds that are not aligned with them politically. And this is where it plays a big role. And then once we have the safety, we've got the investment grade safety from the hardware. Mission 70 makes ICP more investable, more safely investable. This changes the game completely. And in more and more bifurcated world, it's just going to drive even more capital to decentralized systems. And ICP technology being the best and only decentralized compute technology that is far superior than anyone else, 10, 20 years, light years ahead. This is the game changer, because we're already won on the technology front. But once we win on the safety, security, and addressing the investable issue of, wasting money, obviously having the business structure better so it's more investable to the big players. We're talking from the enterprise and government level, and we get that better structure within the ecosystem. It's game over. It's game over. Because that is like the only risk, really, when we look at ICP. It's the waste. It's the waste. It's a waste. It's a waste. It's a waste. It's just not sustainable. You know what I mean? Because it's hemorrhaging money for that reason. So the technology being great, but if it's hemorrhaging money, it's not going to address the smart money capital. It's not going to address the institutions, which just see it as too risky. And then with ICP addressing the hardware thing, obviously make it securable and institutional grade from the hardware front, then we're addressing the underlying economics, and they will be rock solid, obviously making it more, more investable grade for the big players to invest into it, because it's more secure on that front. And obviously what happens? with the underlying technology being so superior to any other competitor, once you align those factors, it's a recipe. It's a recipe for success. That's it. We're positioned for pretty much high degree of probability guarantees success over the medium longer term. And I know a lot of people saying, "Oh, the EU we want to stake our rewards." I understand that certain staking rewards have to be dropped, but the most important thing is that the ecosystem survives over the next 7, 8, 10 years. If this ecosystem doesn't survive, what happens to your rewards? You know what I mean? We all have an invested interest that this ecosystem survives over the long term. And that's why I'm voting yes, and this is why it's paramount. And not only that, this would also give ICP the highest degree of probability to get the best price appreciation over the long term. So everyone wins out, So, yeah. So such obviously measures can obviously exceed everyone's expectation in the long run in regards to price appreciation, because it fixes all the flaws or any potential fatal flaws that are within the ecosystem. Because we know the technology is fantastic. We know the technology is supreme. But there are flaws within the ecosystem, especially on the economic modeling front, that need to be fixed. And once they are fixed, as I said, nothing's going to stop this ICP train. Like the potential is limitless, and at the same time, we're reducing the risk. We're reducing the risk dramatically. At the end of the day, what we all invested it for? We all invested it for the technology. You could talk to most of the other YouTubers, but the technology is far superior. There's nothing like it. We know that. But from the institutional perspective, from the enterprise perspective, to get the adoption to the next level, fixing the economic modeling front of it is paramount, because that's what's going to attract the big capital. And when that big capital flows, oh boy, the price chart then will do the talking. I know the price chart's been depressed for years, but that will eventually change. Because I know how once the enterprise money comes in, institutional money comes in, people will say, like, it's going to come back to them and said, "I wish I should have, could have, I shouldn't have sold." People are going to regret it. And basically, that's how it works. That's how it works, That's why, even in times where it can be difficult to stay positioned, if you believe in the ecosystem, you know that obviously definitely have the best interest for the ecosystem over the next 10, 15, 20 years. They have a 20-year plan. And obviously, building at the start, obviously, it's going to be a lot of cost. They had to build out. They had to pay no providers. Everything they've done, they had to do to build us up to now, where we're going to now. We're into a maturity phase. Now it's time to that's why they've closed all the hubs. That's why they started slashing costs, because it's just hemorrhaging too much money. It's just not sustainable. Now it's about responsible economics. And once we get those economics to pure responsibility, that's going to drive enterprise. It's going to drive the big money investors into it. Because obviously, what do investors look? They look at, in investing in a project, how risky is the project? They look at the economic modeling side of it. If the hardware isn't safe and secure, if the economics isn't safe or secure, for instance, they're not going to invest in that, even if the technology is so great. That's why. So ICP has been building this great technology, superior to everything else. And they've achieved that through the growth phase. Now in the mature phase, they have to sort out the economics modeling of it. And this is what Mission 70 is. Once you sort that out, everything changes on the price front, everything changes on the enterprise, mass adoption and everything. And then once you interlink that with the technology and caffeine and all the innovation with chain fusion, CKBTC, CKETH, and the interoperability powers that ICP have and decentralized compute, nothing stops this train. Nothing stops this train. Like the potential is limitless. The people say, "What's your price prediction?" It's it can shock everyone, even us that are all the viewers that are the believers in ICP's potential and technology. Because once you sort out the economic modeling of it, and that obviously limits the risk of failure, the institutional capital flows can drive this price to ridiculous. Because remember, it's a small market cap. Remember, you don't need that much money to move it. And if you're getting a lot of institutional capital money that is eventually going to come in here, when you sort out that risk economic model, remember, Bitcoin went from, what was it, like $19, $20 to like $1,000 in a year. Like it could blow people's minds apart. They'll be like, what the, no, put it that way. That's the potential. Like it could do that. It could surprise everyone. And wouldn't even shock me if it surprises everyone. Because it's been so depressed. Everyone's just like, just written it off. And usually those investments that, they have that high intrinsic value, they have so much value underneath them, and people write them off, they usually always become the best performers because people sleep on it, people write it off. And the institutions are lurking. The institutions know about it. You know what I mean? They know, they want to invest in, they want to pile into it. But obviously, once those boxes are ticked off, the game changes. I know how institutions think, so I know how institutions position. They only can position until certain things are checked off. They have a certain framework. It's not like institutions can just throw money wherever they can. They have to meet certain prerequisites, put it that way. And those prerequisites, Mission 70 will tick that off, and that will give the green light to take the ecosystem to the next level. So that's why I'm voting yes. And people that really understand it from the institutional perspective, people will say the technology is great, 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 but ICP needs this because the technology is great. The economic model needs to be fixed to take the ecosystem to the next level and to secure its survivability, and obviously limit its risk of failure as a total ecosystem. And that's what's going to bring in a lot of enterprise, government adoption. Because at the bottom line, like when people look at the altcoin market, they look at it as risk. The whole premise of fixing the economic model is eliminating that risk or minimizing it dramatically. So it's investment grade ready. And that's what Mission 70 is going to give it. So that's why I'm voting yes. That's why it's paramount. So we obviously, because it's all about, securing the survivability, hands down, because we all believe in it long term and we want it to survive. We want it to be here in 10, 15, 20 years. We want to see this 20-year roadmap play out. And that's paramount. So I know these videos are long, but it's very important to understand it from different perspectives of why it's important, because many people are not talking it from this perspective of why it's paramount. Anyways, remember guys, to stay decentralized, because decentralization will win in this bifurcated world, and I will see you on the internet computer. Until next time.